Digital transformation is impacting many areas of the financial advice industry and is shaping the future of wealth platforms. In this session, we'll be discussing the digitisation of wealth platforms and how personalisation and data are driving efficiencies for financial advisors and, importantly, enhancing experiences for their clients. We'll also explore the opportunities from a platform provider's perspective to further enable financial advice relationships through technology. I'm Michelle Webber, Head of Wealth Product and Technology at Macquarie, and here with me today is Sarah Brennan, CEO of Investment Trends, Bronwyn van der Merwe, General Manager for Asia Pacific at Fjord, and Brendan Carrick, Senior Analyst from Macquarie Capital. Welcome to you all, and thank you for joining the panel today. So I thought we would start the conversation with an overview of what's happening in the platforms market. So Brendan, perhaps could you give us a little bit of context there?
Sure, thanks Michelle. So it's been quite an interesting couple of years actually across the industry, and we started this probably pre-Royal Commission when we've seen a fair bit of movement with clients and also advisors sort of shifting a lot of their clients from what is called what we describe as the legacy platforms onto more contemporary platforms. Subsequent to this, we saw a massive acceleration of this shift, which was driven by the Royal Commission. And so that's sort of led to, as I said, that dramatic shift, but also an acceleration of these trends, which these contemporary platforms have seen significant benefits from. As a result, this has led to sort of what's sort of coined to be significant competitive pressures in the market. So we've seen a round of repricing from a lot of the providers, predominantly from those legacy providers to try to maintain market share that they were losing. But at the end of the day, ultimately, it really led to not a great deal of shift in that market share, and which has gotten us to sort of where we are now, which is looking like there's going to be a stage of consolidation. So a lot of those legacy platforms are looking to try to consolidate together, and there's been a few of those that have been publicly announced to date. And the view of that, it appears that those providers are looking to achieve additional scale with the view of becoming the lowest cost providers to others in the market.
Thanks, Brendan. There's some really interesting insights there from an economic perspective. Sarah, what are you seeing through your research?
Yeah, no, it is interesting because I think we can sort of link that economic aspect, because one of the things we're seeing a compression on platform margins. At the same time, we're also seeing a pressure on the advisor margins, both in Australia and we've just done our research in the UK, the same. So we're seeing a pressure on their margins. What we're also seeing is a reduction in the number of advisors. And, there's lots of data out there on that, and you can argue at sort of the edges, but, overall, we're actually seeing advisor numbers come down. So if you sort of combine that, there's some interesting sort of dynamics at play from the platform space. But I think the other aspect to sort of keep in mind here is the consumer. And we've seen some quite significant changes from a consumer perspective that I think have significant impact for platforms, and particularly in the high net worth space. By way of example, we've seen the number of validators. So if you think about how we segment clients, we have delegators, self-directed and validators. We've actually seen the number of validators increase quite substantially during the COVID period in particular. And they haven't come from the delegators, they've come from the self-directed. And I don't know if that's being driven because people have got more time at home and they're sort of doing research, and then they're going, okay, I just need to go to someone to seek sort of more information and support. And I think that's really interesting, this rise of the validator for the role of the advisor, and also for the rise of the platform of how they can support those consumers who are seeking this additional information and validation.
Yeah, it's a really interesting time in the market, isn't it? And so digitisation has been a really key theme through COVID particularly. So Bronwyn, what have you seen from a bigger picture perspective and the changing dynamics around digitisation?
Well, I think what's happened during COVID and the pandemic is that customer behaviours have changed at just an enormous scale. When we went into lockdown, what we saw was a wholesale almost reversal of the flow of life. So previously we would go out to do everything from shopping to entertainment to school to work to sport, just everything. And all of a sudden, almost overnight, everything had to come to us in our homes. And that just created an enormous amount of behaviour change. But it also sort of left some companies really sort of caught out because they weren't ready, they hadn't digitised properly, their services weren't online, or they weren't at the standards that people expected. And other real winners who were just ready or were able to very quickly innovate and had the sort of agility within their organisations to, for example, turn on curbside pickup in 48 hours. We saw some examples of our clients doing that. So we had this massive behaviour change, and I think what's really interesting is that it only takes about 30 days for a new habit to be formed. And so what we've seen is just a lot of people sort of start to now have these new habits. My parents, for example, live in a small country town called Malakuta, and they have 4 shops that they can use, and had always just relied on those. And with the advent of COVID, they for the first time started using e-commerce. And it just opened up the world to them. All of a sudden they had the world at their fingertips. They could get anything that they wanted. And that basically sort of took them from being one of those laggards who hadn't sort of jumped that digital divide into sort of using these digital services into becoming a fully fledged member of the tribe. And I think that's happened across the world and certainly across Australia. And so I think the big issue, the big sort of so what in terms of wealth platforms is that I think there's just a much higher degree of confidence of people using digital services for things that they hadn't before, which just changes expectations of customers and also changes what organisations need to do to meet those expectations.
Yeah, it is a really interesting point, the expectations element. What are you seeing, Sarah, in terms of people have these new experiences, and how's that translating to how they work and expect things from platforms?
Yeah, it's a really interesting point, that change of the way that we interact. And the best example I think we see in our research from Investment Trends is the change in how people are interacting with online broking, so broking. So we, in Australia, we've actually seen a 66% increase over the 12 months during that COVID period of people who are actually broking or trading online themselves. We've seen in the US it doubled the number of people. In the UK it was up about 40%, and in Asia it was up about 30%. But they actually have a younger generation that was sort of already quite active online. So we've seen this sort of move to people sort of interacting with finance online. And I think what's sort of interesting about that is then you've got this generation, and everyone always thinks it's younger people, and it was, a lot of them were under 25, but about 2/3 of the new people who came into online broking, for example, in Australia, were under 40. So they were they weren't all under 25. There was sort of that older age group as well. So I think we've just seen this move in financial services from the consumer to be moving online and looking for things online. What I find is interesting is our advisors sort of keeping pace with that. So I think we've seen massive use of Zoom and Teams meetings, etc., digital signatures and all those things which have really helped efficiency, and that's fantastic. But from the consumer side, we just did some research in the UK, and what we saw there was the advisors thought digital was great for increasing efficiency, but there was only a limited amount they wanted to give to the client to be able to do. And there was a little bit of a disconnect about how much advisors wanted to give to the client to be able to do in a digital realm versus necessarily what the clients wanted. And I think, I get that from an advisor perspective. You don't want an advisor going off and doing something, a client going off and doing something that, you don't know about as an advisor. There's compliance risk. I understand that, but I think we have this sort of meeting of the minds, and I use online broking as a really good example of just how quickly things can move and change, and that market's evolving. I think we chatted recently with some people. We've got this thing called copy trading now, which many people might be aware of. But where you can actually, as an investor, you can actually sit and watch someone else trade, and you can just mirror their trades, for example. So it's that education, that use of those digital tools. I think just opens up a different realm.
And what do you think the role of platforms is to help bridge that gap between the client's expectations and enabling an advisor to meet those?
Yeah, I think there's probably 2 aspects, and the one I've said this for a long time around digital. I think one of the really big roles of platforms in digital is just helping advisors to be more efficient. So it's actually that efficiency angle for advisors, and I actually sort of put that as number one. I'm not don't get me wrong, I'm not putting the consumer sort of way back, but I put that number one because I come back to those earlier comments about less time for advisors, less advisors, ongoing service arrangements. We've seen in a number of markets a pressure on profitability for advisors, so actually making them more efficient.
Yep.
So from a platform's point of view, that can be, to Brendan's earlier comments, helping me move from one platform to another, if that's what I want to do. How do I do that and get clean data? So digitisation is going to help that. Giving me tools that I can actually, have a database. The tool that Macquarie's got with the model manager, the
digital portfolio manager.
Yeah, digital portfolio manager. Another great example. So to me, number one is helping the advisor be more efficient is a real role that platforms can play, and then absolutely what tools can we give the consumer?
Yeah, it's interesting your points around the economics as well. So Brendan, maybe what are you seeing flow through around how digitisation's impacting the economics in the platform space?
Yeah, so I think it's a really important point because with what we're seeing with pressure on fees, even though there is a lower number of advisors, the profitability per advisor is coming down because the cost to provide advice is trending up. So there's still, over time, still needs to be a couple of years, I would say, of finding that equilibrium of the right amount of advisors versus the fee pool that appears to be shrinking. So I think that's an important consideration that we need to be aware of and need to be mindful of. What does that mean from a platform perspective and the economics? Well, it's a difficult one because the market's often focused very much on the short term, and so the need for investment is pretty clear from a platform's perspective. And so it's a tough scenario for them to be able to weigh up the short-term benefits, or at least the short-term profitability targets that the market might be expecting of them, versus that longer-term investment that is required to satisfy the needs of those advisors to provide that efficiency, and then that efficiency can then help to offset some of that fee pressure that they might be seeing elsewhere. So we are seeing that sort of dynamic at play, and from a market perspective, there is always quite a lot of focus on that cost line for the platform providers. So about balancing that is a challenge, but something that I think they'll need to be able to do and not have too short a term of a focus to be able to provide those benefits in the medium to longer term for the advisors.
Yeah, I think it's about how do we create efficiency in the platform space as well as then generating it for advisors so we can continue that investment that's required.
Definitely.
Maybe shifting a little bit now, Bronwyn, we were talking a little bit about personalisation and the experiences that are now opened up to lots of people as we've really seen the shift in more online engagement. So what are you seeing in that space?
So I think again, in terms of these rising customer expectations, we certainly are seeing that customer expectations are kind of liquid across industry boundaries. So, if you have a really great experience with a travel provider or a bank, you'll expect the same one, in dealing with your financial wealth. But I think the very best services are those that are obviously very highly personalised, that change in real time around me as an individual based on data and analytics, but they're ones that deliver real value for me. So they know who I am, and they evolve over time, and they get more intelligent over time. And the more intelligent they get, the more they can help me in my life. We call this type of a service a living service because it's just so personalised and so tailored it kind of feels alive. So a really great example of organisations that are doing this well are organisations like Apple and Google. Non-surprisingly, they have a lot of data. But for example, Google, you might have been on a car journey and you get a little notification that tells you how long it's going to take for you to get to your destination. I was driving fairly recently and I got a notification from Google telling me it was going to be 17 minutes to get to my destination. And then the next message I got from Google told me that the pub that I was going to was shut. And are you sure you want to go there? And so what Google is doing, I've never signed up for this, but it is using all of this data that it has about me to predict my behaviours and to proactively reach out to me to give me a little piece of advice or a little moment of delight that makes my life better. It's almost like this personal concierge, and Siri does the same thing. I went to the bus the other day and it told me how long my bus was going to be till it gets to me. But what these experiences do is they sort of just raise the bar of expectation. And all of a sudden I now expect every service that I interact to have that same level of value, that same level of personalisation, that same level of intimacy with my life, so that I'll engage with it and give that sort of permission. Because one of the biggest challenges that you have with personalisation is that sort of hurdle of consent, of permission, and of being allowed into that person's life. And there's that sort of big sort of divide between creepy versus cool.
Yeah.
Yes.
And what's really interesting is that what we found with all of the research that we do in sort of trying to design these types of platforms is that not everyone has the same feelings about what is creepy and what is cool. So some people have a very different sort of threshold for creepiness or for coolness. And so what you really need to do is understand customers very individually and personalise around them. And every time you do something like give them that little moment, that little piece of financial advice, that proactive piece of financial advice, is almost treated like an experiment. Has that worked? How has that person responded? Have they responded favourably? And then you feed that data back into that customer profile that you have about them so that it's constantly evolving and you're starting to get to this very personalised sort of category of one, of one individual, and you're delivering advice that is really just absolutely fit for purpose and perfect for that person.
And I guess an example we saw of that, during COVID with advisors, for example, one of the areas we track a lot of is advisor satisfaction, consumers' satisfaction with advisors. One of the things that really jumped was, if you proactively reached out to people during COVID, every one of the satisfaction bars kicked up above because, and that's sort of I don't know, can you have generalised personalisation? I'm not sure. But, that was, I'm coming out to you on a specific topic, being COVID, and it just kicked every single satisfaction up. But I think your creepy comment is an interesting one because I think, one of the challenges in financial services, again, in the feedback we get from consumers is, yes, I want that next best interaction, I want that personalisation, but what is the nature of that? And I think that's where we have to be quite careful because I think in the past, some of that's been about, well, we can see what age you are, therefore, you need to buy some insurance. And it's not about a purchase, to your point. It's about making my life better. So it's balancing that product sales aspect, which is I know we get from our feedback where consumers are like, versus the how are you making my life better and how are you adding value. And I must admit, the area we see that's being done quite well in some of the research we do is some of the super funds in particular. And maybe because it is sort of, it's very much around that retirement income relationship, but being able to reach out to people and provide that sort of personal interaction, we're seeing that quite effective.
It's an interesting point actually because post the Royal Commission, the industry is grappling with the issue of lost trust as well. And so I think what this feeds into is there's obviously the risk that creepy versus cool, as you pointed out, if it's a bit the trust is not being rebuilt and not in the right sort of not viewed in the right way. If advisors are sort of pushing too hard, then this could be seen as a bit of a concern. But alternatively, this could be a way that the industry can actually start to rebuild that trust. And that's definitely something that I think that if platforms can facilitate that, it could be a huge benefit for the industry going forward.
I think that's a great point. And Sarah, what are you seeing in terms of how platforms can help advisors to build that trust?
Yeah, well, and Brendan's right. That is one of the key areas that we do see is it's an interesting quandary because we've seen this rise of the validator, as I sort of touched on earlier, and then we look at the actual use of advisors, which hasn't actually increased significantly, and then we ask a third question is, where do you need advice? And there's a laundry list. I need advice, and so again, about 60-70% of people are going, I need advice. So it's sort of it's not adding up, and I think that to your point is the opportunity to build that trust because when it's why haven't you sought advice from someone? It does often come down to trust of the advisor. So I think that through platforms, educational information, those tools that can help me budget or can help me risk profile or whatever those tools are that can be sort of supported by the platform for the advisor to sort of be be providing that to their clients. I think they're all incredibly valuable. A good example around, I guess, how supporting advisors can be so important there is ESG. So ESG is such a topic, such a hot topic at the moment. We've just done our first sort of really deep dive report into ESG. One of the really interesting findings, and not something we necessarily expected, was it's clients who are driving most of the ESG conversations at the moment.
Well.
Are you seeing that as well? Yeah. So clients are driving it, not the advisors. And when we talk to the advisors, it's not that they don't want to have the conversation and they don't value it. It's having that confidence to have that conversation with the client. And again, I think that's where, again, those tools from a platform to support the advisor in having the conversation, because clients want to know, what products are available, what methodologies are used, what is it, climate or is it governance? How do you, if it is, how do you unpack it all?
Yep.
So I think that's absolutely, I think, a good example of where platforms can support the advisors in helping them sort of help their clients.
Yeah, interesting. Yeah.
I think one of the other things to consider when we're creating these platforms is to really understand all of the jobs that advisors need to do. So it's really about taking a very human-centred approach to designing them and researching the needs of both advisors and their clients, and designing tools that really meet those needs very well. And so we very often try to understand all the jobs that need to be done, and the place that we can really help to dial up trust is by going beyond just the functional jobs and really starting to understand what are some of the emotional and social jobs. There's a methodology that we use that really helps to sort of amplify some of those other things that will drive trust, because it is about, for example, giving them confidence or giving them status or some of these other things that are needs that advisors have. And if you can really understand those and build those into the platforms and also build those into any direct-to-consumer plays, I think that's when you really kind of elevate, you differentiate, you start to deliver sort of a branded experience that helps you sort of differentiated from other players in the market.
Yeah. And perhaps an example of that, and I think because we've got open banking coming through at the moment, is from a platform perspective. I always sort of think about platforms. We created platforms platforms were created for sort of three reasons. One was access to managers and being able to get all that investment. The second, I think, was to make advisors more efficient, and the third was to give clients efficiency and that sort of engagement experience. And I think the first one we've absolutely ticked. I think we're still working on the second two, and I think that client experience. One of the areas we sort of see coming through in our research is, can I just get everything in one spot? And that's not just my investment, that might be my banking, but it also might be my debt side of my portfolio with, property, et cetera. And it's been, it's sort of like an asset and liability platform, I guess, but from a consumer experience point of view, that makes my life easier.
Absolutely.
And you can imagine, to your point about your next best interactions, the things you can do when you've got that sort of full
Single
relationship.
Yep.
Yeah. And, maybe that ticks that, part of that client, experience box of what platforms can help do.
Well, I think it's an interesting point around the data and connectivity that enables that.
Yeah.
And importantly, trust is really critical to that point as well. So in terms of data and connectivity, what sort of themes or what could we be doing better in that space to help enable? What are you seeing through the research?
Yeah. Probably, again, if I put it into those two buckets, consumer and advisor. For the advisor and the advisor efficiency, I think we talked about earlier about data transfers, so that clean data, because that is such a challenge for advisors and have so much empathy for them on that. But I think the other side is actually providing the data to the advisors so they can use it to understand how their business is operating. So, can they do more things efficiently? Is there some ways to automate how they can communicate still in a personalised fashion, but with their clients? So, I think on the data side, there's definitely opportunities to help the advisors, both on the efficiency side and on that sort of consumer interaction side, but without losing that personalisation. I think that's sort of the challenge.
And that efficiency point, sort of working out how platforms can really plug into the advisor's ecosystem and feel like it's a seamless experience for them in their offices.
Exactly.
Is going to be really critical.
Yeah, agreed.
So going back to the point around trust, we've seen lots of scams and fraud evolving, particularly increasing with COVID. And I was reading recently that I think there's been about $78 million worth of fraud and scams just this year in Australia, and I think about 38 million of that was in relation to investment scams. So it's a really difficult area, and I'd be interested in your thoughts around what can platforms be doing, and importantly, how should advisors be thinking about this really rapidly evolving space?
I think the biggest thing is education. We at our organisation have to do training every month on security to really identify what phishing looks like, identify all of the sort of flags. We have to do all of these tests. We actually have a sort of a bronze, silver and gold sort of medal standard that we have to do around sort of just understanding all of those security risks. But it's just hammered into us, and because it's just so critical. But I don't know that your average consumer gets that training, and I don't even know that the average advisor is getting that education and training. So I think there's a really critical role that the wealth platforms can play in taking some of that responsibility to ensure that those messages get across, or facilitating the advisors to educate their clients.
And I fully agree. I think the other thing from an advisor perspective is be asking their platforms what security do they have in place. I know we at Investment Trends do a detailed platform benchmarking study, of which Macquarie participates, and in that, the actual questions around the security aspects of the platform are coming to the fore now. So, how do you deal with cyber risks, etc. Is as if not more important than the features on the platform. How many managers can I access, and do you have margin lending, etc. Is actually that security. So I think that is one aspect for the advisors, is just asking their platforms, and then I agree, the platform then actually being able to help the advisor understand the risks maybe in their business. And educate and support in that way.
I think the responsibility also does lie with the platform providers. There's always going to be the need for them to continue to invest, to have them, or to make sure that they're well equipped to deal with these potential issues and instances of fraud and scams that could arise. But given that they have access to a wider, the whole network of advisors effectively, so if they do see examples within some of the subset of their advisors, that they can then communicate or make sure that the rest of the advisor network is aware of potential instances of fraud and identifying those risks to minimise further risk for the rest of the industry.
Yeah, I think it goes to your earlier point around the investment piece, and because this space is so rapidly evolving, there's a requirement for continuous investment and evolution. And I think the point around education is also critical. We're seeing a lot of evolving incidents in this space, and I think it's somewhere that we need to keep supporting advisors. So it's been a really interesting conversation. Thank you all for your time today. I think we could speak for hours on all of these different areas, but I think it's been great to really unpack what digitisation means for platforms, how does that evolve into personalisation and the trust that's created, so that we can really make sure that we're valuing clients' data and helping them to get the most value out of the relationships. So thank you, everyone.
Thank you.
Thank you.